Tuesday, March 9th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to talk about the Basel III, gold, and the SDR. There are a lot of questions and I think a lot of misinformation about Basel III, the Tier 1 capital and gold. The SDR maybe a little bit as well. And yes, I've spoken about gold and tier 1 and the BIS or the Basel III rules. Basel III rules, of course, are related to the Bank for International Settlements. They regulate the too big to fail banks through the Financial Stability Board in Basel, Switzerland. The FSB is part of the BIS, but it's kind of separate for regulatory reasons. And I remember back in the beginning of 2019, there was all this excitement, all this expectation that gold was going to be made a Tier 1 asset as of March 29th, 2019. And I couldn't find anything about this on the BIS website, and it's quite transparent in terms of the regulations, what they're going to bring out, the BIS. I know it's a very private institution, and I even made a short video back then on March 20th. It's only 3 minutes long, and I'm going to put it up in the cards and in the description, and I even called the press office at the BIS in Basel, and I spoke to a lady there, and she said, no, there's nothing happening on March 29th, 2019. So, and again now, I see that it's the same individual that was pushing this story back in 2019. He's pushing it now, saying that gold is going to be a Tier 1 asset from March this year until 2022. I still haven't found that on the BIS website. But one thing that could be happening to gold under the BIS rules or Basel III rules is that gold could become a Tier 1 asset in terms of credit risk, because there's several risks that the Basel rules talks about. There's market risk, there's credit risk, and liquidity risk. I could see gold becoming a Tier 1 asset in terms of credit risk and liquidity risk, but maybe not so much for market risk because of the fluctuation in the price. And it could become Tier 1 under market risk if the powers that be remonetize gold and fix gold at a certain price. Then we could have that. But as of now, yes, it's possible that it will become a Tier 1 asset. I haven't found anything, but that shouldn't be the reason why you accumulate gold or silver. It shouldn't be the reason why you do it just because the Basel rules are going to change. I think people put too much importance into this subject. So, yeah, that's how I feel about it. There's a lot of hype about this Basel III. I think people should not put too much emphasis on this. And as I've said, yes, it's possible. I haven't found anything. They've been talking about gold for many years through the supervisory board, the FSB, through Basel III. I think gold already is a Tier 3 asset, if I'm not mistaken, which means that they can count it as a 50% weighting in terms of their Tier 1 or their capital, so to speak. But one thing I would say, though, if it does become a Tier 1 asset in terms of credit risk or liquidity risk, the banks that hold that gold will still have to hold it physically and allocate it. So it wouldn't be like an allocated or a future. So that would be positive. That would be mean that there would be more demand for physical gold. And with the SDR, there's a lot of talk about the SDR, of course. SDR, of course, was created in 1969 by the IMF. It's called the special drawing right. I've spoken about it many times. It's a basket of the major fiat currencies. And at the time, the system was having trouble because the United States was issuing too many dollars. There wasn't enough gold out there. They wanted to basically create a paper gold to kind of keep the system going. And now there's talk that they're going to bring the SDR. They have been, how can I say, testing the SDR in countries like China through bond issuance. They do want to create a very liquid SDR Treasury market or bond market. I've spoken about this about a week or two ago. And there's a very interesting article back from 1972 by John Exter, who used to be a former central banker. And in this article, he talks about how after 1971, when Nixon closed the gold window, that all currencies today are IOU nothings. And he touched upon the SDR. And this is what he said about the SDR. And I quote him. In recent years, there has been an attempt to substitute so-called paper gold or special drawing rights in the International Monetary Fund for real gold. So you see, this is, again, it's if they bring in the SDR as a global reserve currency, which they probably will, it won't be real gold unless they change their mind. And they prove Mr. Extra wrong. Well, maybe 50 years later, and they actually require countries that are part of the IMF to basically park their gold holdings with the IMF. That could be the next step. You could have this global issuing authority, the IMF, one world government. Bank or currency issuer, and then all the other subservient countries have to park their gold reserves with them. It could be the reason why China and other major central banks like Russia and many others, of course, have been buying gold. Maybe they're expected to park this with the IMF. Maybe the IMF will have some, the SDR will have some gold backing, but when it was created, it wasn't. And this is what he said, John Exter. And I continue here. It says, one high IMF official is even reported to have called gold metallic SDRs. If used seriously, such an appellation flies in the face of marketplace assessment of store of value money. The SDR has no obligor, no promise to pay any store of value money at a fixed price, and no fixed maturity date. Other than a complicated reconstitution provision, it cannot be sold at will, only by central banks in deficit, and only to central banks strong enough to be designated by the IMF to receive them. So it is a who owes you nothing and when, and it does not even pay a market rate of interest, only 1.5%. I guess back then that wasn't much, but now it would be quite a bit. If central banks ever monetize them in significant amounts, they will have moved from the days when they issued their IOUs principally to buy enduring store value money like gold, to these days when they issued their IOU nothing principally to buy government IOU nothing, 2 days when they would issue their IOU nothings to buy who owes you nothings. So this is how I see the SDR. It will only be a solution to the dollar problem, the old Triffin paradox, where the major reserve currency eventually falls out of favor because the country that has the major reserve currency has to run huge deficits. And why is that? Well, because the other countries that have to use the dollar for international trade, they try to compete or they compete with the US through devaluation, through cheap labor, and they accumulate surpluses. They sell a lot to America because they need the surplus in order to function. Because if they want to buy something from another country other than the US, they need dollars. And that's Triffin's paradox. So yes, the SDR could be a solution to that. But will it be a solution to the current unsound fiat currency system that we've had since 1971? I don't think so, unless they back the SDRs with gold and they fix the SDR at a certain level versus gold, and they make it convertible on demand. And it won't be us carrying SDR notes. It will be between sovereign countries, sovereign treasuries settling international trade. It will be pretty much like, let's say, a Bretton Woods system that worked from 44 to 71, where France could go to the US Treasury and say, oh, here's $35, give me an ounce of gold. If they do that, then I could see the system working. So does all this mean that I don't think one should have gold and silver? Because I've put a little bit of uncertainty here about Basel III, about the SDR. No, I think it gives us even more reason. I think gold and silver will help rebalance the whole system, because we've shifted too much into paper assets. The values are here and real assets are down here. And what a reset, if you want to call it, of the price of gold and silver will do is basically show that the wealth, a lot of the wealth, paper wealth that's been created over these last 50 years are illusory. They're not real. It's going to help rebalance things. It's going to shift a lot of the wealth from the people who think they're very wealthy because of what their portfolio says. The paper wealth. That's what I think is the major function of gold and silver. As Jim Sinclair has said in his book, The Handbook of Gold, the Pocketbook of Gold, that gold is a revealer of true wealth. And it does that through the reset, through the price appreciation, like it did in 1980, like it did in 1933, 34, and like it will do, I think, very soon. Can't tell you the date. So that's how I feel about Basel III and the SDR. I wouldn't get too excited about it. Just keep stacking. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London. We've got spot gold at $16.98. It's up about just under $15. The high's been $1,700. And the low has been $16.77. We've got silver at $25.60. It's up 50 cents, so 2%. Gold is up just under 1%. The Dow futures up 0.5%, 165 points. S&P is up 31, up 0.8%, and the Nasdaq 100 futures up 1.5%. 192 points. The currencies, we're seeing the currencies rebound here with gold and silver. The pound is up 0.5% at 138.85. The euro is up 0.33% at 118.88. The dollar is down 0.2 versus the yen at 108.70. Dollar's down 0.4% versus the yuan at 652.45. High-grade copper is down 1.6% at $4.02. WTI crude is up 0.5% at 65.25. Before I look at the Treasury market, just wanted to let you know that this week, starting today, we've got a lot of supply What do I mean by supply? Well, the U.S. Treasury is going to issue debt, and specifically notes and bonds in the primary market. So they're going to borrow this money. They call it issuing bonds, but it's actually borrowing. And they're going to issue today 58 billion of 3-year notes. Tomorrow they're going to issue 38 billion of 9-year and 11-month notes, or basically 10-year notes. And then on Thursday, they're going to issue 24 billion of 29-year and 11-month paper or 30-year bonds. So that's a total of 120 billion in the next today and the next 2 days. We saw that Treasury yields yesterday spiked up above 160. So the Treasury market is not out of the woods. People are waiting for the Federal Reserve to come out and say they're going to extend the statutory leverage ratio that expires at the end of this month. That would help the banks be able to buy more treasuries that are issued. I think it could be quite choppy here, the Treasury market. We could see a lot of volatility with the uncertainty about that. People also expect the Federal Reserve maybe to announce a twist or yield curve control, and they haven't said anything. I guess they've got till March 31st for the SLR, but I would say that for the yield curve control announcement and other announcements, maybe increasing QE to keep yields low, it could be March 17th, which is the next FOMC meeting. So we're going to have to wait until then. Or if things get a little bit, how can I say, volatile, they could come out, they could panic. But I think they're going to wait. But as I see here, overnight, for some reason, the 10-year yield is dropped by 5 basis points, which is a fairly big drop overnight, I would say, especially seeing that the U.S. markets are not in yet. Yes, treasuries are traded in London, but it could be some kind of prepping the market for the auctions. They're trying to, I don't know, make it so we're not going to see failed auctions, which I don't think we will. We need to keep an eye on the bid to cover ratio at the 3-year auction today and the other ones tomorrow and the day after. Bid to cover ratio means basically, let's say there's a 10 billion for sale. If there's bids for 20 billion, that means there's a 2-to-1 bid to cover ratio. The higher that ratio, the better for the market. It means there's a lot of demand. The lower the ratio, it's vice versa, right? And also we have to see who's been buying these bonds or notes in these auctions. If it's been taken a lot by the primary dealers, if it's been taken a lot by foreigners or indirect bidders, all these things, I'm going to keep an eye on it, and I'll report back to you tomorrow. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.